Okay, all right. So that's opinion coming in. But let's get some more going. Gary Schlossberg is global strategist at Wells Fargo Investment Institute, and he's joining us right now to take some questions. Gary, great to have you with us here. Thanks very much. For those who are asking whether what happened in the UK is soon coming to the US as well, what would you say?
Well, as you pointed out earlier, it was really more country specific. Certainly, if it did spread to other countries, and there are other issues out there, if it really began to unsettle the global markets, the Federal Reserve would have to take note. But at this point, the Fed remains focused on inflation and staying with, we think, that hawkish monetary policy, pointing toward a fairly aggressive move in November and perhaps December.
Gary, good morning. So in that case, would you say that this is a rally to perhaps sell into if you could not in the entire downturn?
Well, time will tell, but our feeling is that the fundamentals in the global market in general, in the U.S. in particular, really haven't changed. We see the economy headed toward a moderate recession beginning very, very late this year, early 2023. And what's going on in the markets now, I think you have to consider what the driver was for the Bank of England's action. It was to try to stave off instability. It wasn't an improvement in fundamentals. So with that view, yes, I think little has changed fundamentally, certainly for the United States and for the rest of the global markets.
So if little has changed fundamentally, and these are problems that are well known in the market, Gary, do you believe the worst of the sell-off, especially in markets like the Dow and the S&P, are now behind us? Because those markets are down 20% already. Have they priced in the worst?
Well, I think the market may have gotten ahead of itself in the run-up to the Bank of England's action. There was a certain amount of short covering. But going forward, we still see a difficult environment. We have the Federal Reserve raising interest rates. That will create a headwind for valuations, putting pressure, perhaps further pressure on valuations going forward. And if we're right and the economy is headed toward even a moderate recession, we're already seeing earnings estimates being scaled back from what we had always thought was a fairly optimistic level. And we think the reports themselves will show a weakening in corporate earnings in sync with a weakening economy. Now, keep in mind, the stock market, it does tend to be a leading indicator. And if we're right on the timing of a recession, the worst of which would be in the first half of the year, we could see the market begin to anticipate improvement, but that probably won't come until early 2023.
Here in India, we are starting to see foreigners selling again. This week, I mean, 3 sessions basically, we've got almost $2.5 billion worth of, actually less than just under $2 billion worth of sales. What would you say is happening in terms of attitudes towards emerging markets? Is it just, a dash for cash, dash for dollars? Get it back home because there's general uncertainty?
Well, I think there's a certain amount of uncertainty driving the dollar higher, increasing the odds of fairly aggressive interest rate hikes. We are expecting the RBI to raise interest rates, as you pointed out, by a good amount. We're already seeing the Indian economy beginning to slow in its growth rate. Now, growth is still quite attractive compared to rates that we're seeing in much of the rest of the world. But the growth outlook is beginning to dim a bit. So to the extent the market had priced in a solid growth rate, we're going to be losing a bit of that. And at the same time, with the Federal Reserve expected to continue raising interest rates, providing that underpinning to the dollar, that will create an added headwind, not only for the Indian market, but for many other emerging markets as well.
So what does one do at a time like this then, if you are an investor in India? Because if you believe that the Indian economy is growing, but the growth is slowing down, you think at some point the markets will play catch up? We're not even down 10% from the top. If there is more to go on the downside for India particularly, what's your advice to investors?
Well, I would think the advice should be much the same as we're giving here in the U.S. You move into more defensive sectors of the market, less economically sensitive, stay with the quality companies, the larger cap, the larger companies, healthy balance sheets, to ride out what likely will be in India more of a growth recession rather than an outright decline in GDP. In fact, I'm not even sure I'd call it a growth recession, but certainly a winding down of economic growth that creates uncertainty in the market. Doesn't mean you have to pull out, but I think you do have to become a bit more defensive in your strategy.
Okay, get more defensive in your strategy. Got that. Thanks a lot for joining us, Gary. Have a great day.
Thank you.
That's the
Thank
word
you.
coming in from Wells Fargo Investment. They say that, yes, there's a 50 basis points. There's a rate hike coming from the RBI tomorrow.